equals the sum of H65 through H70. And once you have all of those, we can fill those to the right, F9 to recalc. Okay, obviously we're going to, these numbers are going to change. All right, we still haven't accounted for any of our debt, so these numbers are really low. All right, but that's okay. We've set the links up. The numbers will fix themselves once we complete our model. All right, let's go on to the equity section, and then we'll be done with the balance sheet. Remember what we said earlier, retained earnings is going to be simply last year's retained earnings plus this year's net income minus any dividends that get paid out. We're not assuming any dividends in this model. So it's just equals last year's retained earnings plus this year's net income. Formula-wise, that is equals G74 plus H40. And then common stock, remember we said on the assumptions tab, we set it up that common stock would be 10 million a year. So we'll link to that equals H34 on the assumptions tab. Fill to the right. Now we can calculate shareholders' equity, total shareholders' equity. Can I use alt equals here? Yes, in this case I can. Again, alt equals is going to go up, get all the cells above, stop right before the next empty cell. So alt equals gets the job done, F9 to recalc. And then total liabilities and equity is just exactly what we've said. Equals total liabilities, or H71, plus shareholders' equity, H76. You can fill that to the right. All right, and now we come down to a line that we may not have seen before. It's a check figure. What does this represent? Can anybody tell me? Yeah, this is something we're going to use as a quick check to see if our balance sheet balances. If our balance sheet is out of balance, then there's obviously something wrong in our model, or we're just not done, or what have you. So this tells us, is our model functioning correctly? It doesn't tell us necessarily whether we've made good assumptions, but it says, basically, have we set up Excel? Have we done the Excel work and the proper Excel references such that our balance sheet is in balance? And the way we calculate this is, you can see either assets minus liabilities and equity, or the opposite. Right? Either way, when our model is done, that check figure needs to be 0 in every year. All right, so I've set that formula up to be equals H59 minus H78. Again, you could have it be the opposite. But at the end of the day, when we're done, there should be no difference between our asset figure and our total liabilities and equity figure. Right? And obviously, we're not done. All right, let's start working on the cash flow statement. Remember, the cash flow starts off with net income. So in cell H82, I want to link up to cell H40, net income for that year. All right, so equals H40, you should get 33.9 million for year one. You can fill that to the right. F9 to recalc. Depreciation and amortization come right off the income statement. So we'll say equals H16 plus H17. Again, H16 plus H17 for the DNA. All right, now we get to our changes in working capital. In my experience, by far where most students make their mistakes. Usually when I make a mistake myself in a model, it usually comes from here as well. And again, typically it's a sign change error. All right, so let's just talk through this one more time, make sure everybody understands how increases or decreases in these accounts are to be treated insofar as a cash flow statement is concerned. So if we have an increase in accounts receivable, is that a source or a use of cash? It's a use of cash. All right. Uses of cash need to be reflected as a negative. If I have an increase in an account payable, however, one of my working capital liability accounts, that would be a source of cash. All right. Conversely, if I'm paying down a payable, obviously I'm writing a check to a vendor, that's cash going out of the company, that should be listed as a use or a negative in my cash flow statement. All right, the easy way to calculate these and get the sign change correct, all right, is instead of taking the negative of this year's receivables minus last year's, Quicker way to do it is take last year minus this year. All right, so therefore, if receivables go up, it's automatically treated as a negative. Does that make sense? So for receivables, our formula is going to be equals G48, last year's accounts receivable, minus H48, this year's accounts receivable. Receivables have indeed gone up by 1.5. Because I'm taking last year minus this year, that 1.5 will be captured as a negative or a use of cash. If you make sign change errors, if I had this improperly input, say I did this year minus last year, I had this as a positive 1.5, and assuming everything else in my model was okay, my model would be off by 3 million. The difference between negative 1.5 and positive 1.5. Now, because inventory and other current assets appear in this same order up in the balance sheet, I can actually just fill this down 2 cells. So if I select my accounts receivable, scroll down 2, hit Control D, and F9 to recalc, I'm now calculating my changes for my inventory and my other current assets accounts. And now I can fill these also across to the right, F9 to recalc, and I've got it for all 5 years. All right, so again, the reason I was able to fill that down or copy and paste that down is because these 3 appear in the same order in the balance sheet as they appear here in the cash flow statement. Everybody have those now? Now my working capital liability accounts are actually a little more straightforward. Because again, if those increase, those are a source of cash. So if I take the difference, if I take this year minus last year, and it's a positive, I've already accounted for the sign change properly. So for accounts payable, in other words, I want to say equals this year, or H62 minus G62. This year minus last year. AP went up by 0.7. By taking this year minus last year, it'll be captured as a positive, as it should. It's a source of cash. And here, again, because AP, accrued liabilities, and other current liabilities, these 3 items all appear in the same order up above as they do here, I can fill this formula down 2 rows as well. Don't fill it all the way down to change in other liabilities. This is a long-term liability. Just fill it down to other current liabilities. Control D, we can fill it across to the right. F9 to recalc. And your numbers should look like this. Make sure you hit F9 to recalc first before checking your numbers. And then the last item I need to calculate, my change in my other liabilities. This will be calculated using the same methodologies we just used for our current liabilities, this year minus last year. So for change in other liabilities, I want to say equals H70 minus G70. There's actually no change, 0. And fill that across. And now we can calculate cash from operations. Everybody follow, everyone with me? Any questions? Again, this is typically where people make their mistakes, or make one of their most common mistakes in modeling. If your model is off, that is, you get to the end, your balance sheet doesn't balance, usually the first place I check is my working capital, make sure I got the sign changes correct. All right, now CapEx. Again, CapEx, always a negative, always a use of cash. And remember from our assumptions, CapEx is going to be calculated relative to sales. I think it's 5% of revenues. And so what I want to do, because I want this to show up as a negative, instead of saying equals, I want to say minus revenues, or H7, scrolling all the way up to the top of my income statement, times, control page up, H27 on the assumptions tab, 5%. Make sure you use that minus sign. If CapEx is positive, you've done something wrong. You should get minus 10.5 in year 1. Fill to the right. F9 to recalc. Okay. Then asset dispositions. Remember we put an assumption of 0 for that on the assumptions tab. We need to link to that. Equals H28 on the assumptions tab. 0. Fill that to the right. And then our cash from investing, in this case, we can just use alt equals. It's just going to give us the sum of these two. All right, so for cash from investing, alt equals. We'll fill that to the right as well. All right, now I'll point out, if we scroll up to our gross PP&E numbers, remember initially when we entered this formula, it was staying flat at 323.2 because we didn't have any CapEx yet. Now that we've done our CapEx down below, our gross PP&E is indeed growing every year by the amount of that CapEx. If your PP&E is if your gross PP&E is shrinking, it probably means that you did not properly set up this formula to subtract that negative CapEx figure. All right, so I'd just check on that, make sure your gross PP&E is in fact growing. If it's not, let me know. We'll make sure we fix the formula. And now the last part of our cash flow statement, cash from financing. Again, here we're going to measure changes in our debt accounts. All right, if we had changes in the equity accounts, we'd measure them here. There's going to be no change in our common stock. So we're just measuring our change in our revolver, term loan, and unsecured debt. We're going to do this right off the balance sheet, just like we did for our working capital accounts. And it's simply for each of these line items, we'll take this year's balance minus last year. So obviously, if the company's borrowing, that balance is increasing. That's a source of cash. If they're paying it down, that balance is decreasing. It's a use of cash, right? So for the revolver, I want to say equals H67 minus G67. And right now, you should get a minus 40.8. All right, if you've set it up properly, you should get a minus 40.8. Ultimately, that won't be the number. All right, but the link is correct. Remember, our debt accounts are linked down to our debt schedule, which we haven't done yet. So this will change as we go. We can also fill that across to the right. F9 to recalc. And now, just like I did in the cash from operations section of my cash flow statement, because the revolver, the term loan, the unsecured debt appear in the same order above as they appear down here, I can copy the formula from my revolver line down to those next two. But in this case, I don't want to use a fill command. All right, the reason I don't want to use a fill command is, as I look down here, this worksheet's been pre-formatted. All of these numbers, or all of these cells in the change in unsecured debt line, are formatted to have an underline. If I simply fill down, it's going to fill everything from each of these cells down below, not just the formulas, but also the formatting, which means I lose that underline, which means I have to go back in and reformat it. All right, so this is where we're going to use a little bit of a different paste command. We're going to use Control-C to copy, but we're going to use something called a paste special when we paste this to preserve the formatting in those cells. Right? In paste special, there are a number of ways we can do this. In this case, what I want to do is I want to paste only the formulas and not the formats. And I'll show you what I mean here. So I'm going to hit Controls. I'm going to select my cells to copy, Control-C to copy. When I select my range into which I want to paste, instead of hitting Control-V to paste, I want to hit Alt-E for edit, S for paste special, F for formulas. Hit Alt-E-S, you should get this pop-up. When you hit F, it should select formulas. Now in English, what this is telling Excel to do is paste only the formulas from those cells you're copying and nothing else. All right, leave the formatting alone. So Alt-E-S-F will paste special formulas. I hit enter, F9 to recalculate, you'll see that those underlines stayed there. Now, if you're formatting as you go, if you're not working in a pre-formatted worksheet, it doesn't matter, all right? But this was pre-formatted. I wanted to preserve that formatting, so Alt-ESF, paste special formulas, allowed me to do that. There are a number of other paste special commands. We'll show you those as we go. Next week, we'll get into a couple of the others. But for now, paste special formulas is the one that works here. And the more you do this, you're going to start to see this automatically. I need to use a paste special formula without even thinking about it. You get really good at these shortcuts. And then for my cash from financing, to sum those up, Alt equals. You can fill those to the right. All right, these values will change, but my links again are correct, just as we've seen in a number of situations. All right, and then total cash flow, as we know, is simply equal to cash from operations plus cash from investing plus cash from financing. Formula is H93 plus H98 plus H104. It's our total cash flow for the year. Fill those to the right. F9 to recalc. And now we can use that as well as our beginning cash to calculate what our ending cash is going to be. It's another way of saying beginning cash. Last year's ending cash. Right? Same with our debt. Beginning balance of our debt is equal to last year's ending balance. We'll use that in a moment when we get into our debt schedule. But here, when we're asking for beginning cash, we can just say equals last year's ending cash. So what I want to say is equals G110, last year's ending cash. My change in cash position is another way of saying total cash flow, my total cash flow for the year. So here I want to say equals H106. My ending cash is just the sum of the two, beginning cash plus my change in cash for the year, which I can use Alt equals. I can fill that across, hit F9 to recalc. All right, well, look, if we look at our ending cash right now, it's currently negative. And what did we say earlier today? You can't have negative ending cash. You're not going to see a balance sheet with negative cash on it. Right? Another way of saying negative cash is we need to borrow. All right? So let's fix that right now. And the way we fix that, again, that revolver is our credit card. It's the company's way to fill cash flow shortfalls or as a way to pay down some of its excess balance if they have excess cash. All right. What I want to do is if we go to cell, any cell in row 112, all right, any cell on that debt and interest schedule row, what I want to do is I want to insert a row because I'm going to figure out, I'm going to put a formula in here that partially allows me to figure out how much I need to borrow or how much I can repay. All right, so just follow along. We're going to explain this as we go. First thing I want to do is insert a row. The shortcut for that is Alt-IR. Okay, insert row. Alt-IR. You can also insert a column. I'm not going to need to do that today. But if you ever need to, Alt-IC. What I want to do in this row, now that row 112 should be blank, I want to title this Change in Cash Before Revolver. And what I want to measure here is basically exactly what we've used to title what we're calling this, Change in Cash Before Revolver. I want to look at all the changes in my cash before I look to the revolver. Remember, the logic is the revolver is